Hello and welcome to a special video following a surprise move by the Swiss National Bank to drop their minimum exchange rate. That was at 120 in euro Swiss. They also cut rates, taking interest rates further into negative territory, now standing at minus 0.75%. So in terms of the market reaction, it was aggressive in Swiss products. We saw aggressive strengthening in the Swiss franc, which led to euro Swiss falling over 30 points. And that means its biggest drop since 1971. So alongside that, we saw euro weakness across the board as market participants moved out of euro and into safe havens, such as the Swiss franc. But also the Japanese yen benefited and gold benefited. Gold benefiting also from a drop in the dollar, partly due to some strength in the Japanese yen, but also a break of 200 DMA to the upside in gold, and also market participants speculating that the fact that the Swiss National Bank no longer have to defend the euro-Swiss floor means that they have greater purchasing power, and they're likely to then be interested in other assets, so they could move their cash away from defending the floor and move it toward buying gold. Now, the fact that the SNB are no longer going to defend the 120 floor in euro-Swiss also means that there may be less support for euro. The SNB were the biggest daily buyer of euros in the market, and this means that due to the fact they won't be in the market, euro could continue to slide, as well as the fact that this means that there's a greater prospect of QE, as the SNB had cut rates to stop people parking their cash with the SNB once the ECB announced stimulus. So central banks across the globe readying themselves for stimulus measures from the European Central Bank. Now, in terms of equity markets, initially saw a bit of selling pressure as people speculate that this is likely to be very damaging for the Swiss economy. It would mean not only a stronger Swiss franc, but it's also likely to be deflationary, as import prices could be cut, leading to a fall in inflation. Which raises another point. The fall in inflation and strengthening of the Swiss franc could mean that the SNB will then be pressed into unconventional monetary policy. So the SNB themselves could announce QE alongside the ECB, or later on in a few months' time. So this has broader implications on the ECB, although unlikely to change the course of action, but it just heightens the prospect of QE and makes it an almost certainty if central banks are preparing for this. It means that the SNB, they'll have to do unconventional policy, or it's very likely. It also means that other currencies may have to drop the floors as well, like Euro Czech, the Czech krona, that stands at 27, and the central bank are likely to find it even harder and more expensive to defend the floor if the euro continues to decline. They're the main points, though. Could see a choppy open in the US, particularly given that equities have been chopping around, initially down on the idea of a weakening Swiss economy, but they have since rallied on the prospect of QE. But thank you very much for listening. They're the main points, and I hope we didn't get too caught up in these Swiss moves.